Crypto Hotep here with another investing video. We are on week 22 of the Family Portfolio Tracker. If you're unfamiliar with the Family Portfolio, please do yourself a favor, go to my channel and click on week 1 of the tracker. In a nutshell, what we are doing every week is tracking a portfolio that my family and I made specifically. So I shortlisted some stocks through some research, had my family pick each stock of theirs that they would like to add to their own personalized portfolio. Then we used M1 Finance to create a family portfolio, and within the whole family portfolio, each family member has their designated pies, is what they call them, which is allocated of the stocks that they initially chose. And every week, we will review the portfolio, see how it's doing, see how the market is doing, look at dividend activity, talk about our emotions, our thoughts, and strategy. And hopefully these videos will be helpful to my family when I'm no longer here, or just in general. Very educational. Hopefully they're helpful for you as well. If they are, feel free to like, subscribe, and comment. But by any means, or by no means at all, I should say, is this financial advice. Please consult a professional before you trade stocks, crypto, metals, anything volatile. And with that being said, let's jump into the video. Before we go to week 22, we always look back at the prior week to see where we were at. So 793.32 was the balance for the family portfolio on week 21. We also had a weighted rate of return of a little bit over 9.5%. It was very good. Now let's see what happened this week here that we're currently in. So now here we did go down actually, 776.33. Weighted rate of return went down to a little less than 6% here. Why did that happen? Okay, well, the market did have a sell-off that happened earlier in the week. One of the main reasons, other than tensions across seas, I would say is this. Warren Buffett raised Berkshire cash level to record $277 billion after slashing stock holdings. This was released on Saturday. This is how big this was. This was released this past Saturday, and this was all the talk on Twitter. I'm assuming Facebook, but this was really on the big talks on Twitter, just of the amount of cash that Warren Buffett has built up. But the biggest thing was his selling of Apple. He did sell a significant portion of Apple, but I think what goes and falls by the wayside is Apple is still Warren Buffett's and Berkshire Hathaway's biggest holding. Even though he sold close to 50%, which is a lot, it's still its biggest holding. I think the bigger item at hand is the amount of cash that he is sitting on, which is over $275 billion, and that's with a B. I think they're stockpiling cash and having some quote-unquote dry powder on the side in case of dips that could potentially happen. So I think Warren Buffett is seeing a potential correction come into play, and he wants to be ready with enough ammunition to go to war and get some good deals on some great companies. The market did not like that by any means, and the sell-off actually started on Sunday when the regular stock market was closed, but the futures market was open, and the futures started to sell off. This translated into also crypto selling off and the stock market selling off very harshly. But it did rebound though. So we didn't rebound to last week, but we did rebound. And so with that being said, let's hop on in here and see what we have. So we do let's look at the activity first and see what we have here. Okay. So between this week and last, a couple things did happen here. We did have some dividend activity. So John Deere and Company, we had 4 cents. and that went to my portfolio. And then Lowe's. I do hold Lowe's as well, and that's 3 cents. Now, if this is your first time watching the video and you're scoffing at these numbers, 4 cents and 3 cents, those are just pennies, Crypto Hotep. Well, you are correct. They are just pennies. However, these are pennies that I didn't put into my portfolio. These are pennies that John Deere Company and Lowe's paid me back for holding their stocks. And the biggest thing about dividends is it's just a constant snowballing effect. It does start out small, it does, but you do have to start somewhere, and as you gradually increase your position size, those dividends will gradually increase as well. And I just want to continue on the consistency of receiving those dividends. Okay, with that being said, let's go into the portfolio and see what we have here. So we always go bottom to top, and on the bottom we have my wife. This is, I want to say, the third or fourth week that she has stayed at the bottom. Her portfolio from the naked eye or from the outside does not look good. Down a negative 26.82%, market gain of negative $12.35. Why? Because of Celsius Holdings. Celsius Holdings has been selling off for about a month or so. Not a good sign. Everything else on her portfolio, Pepsi, Google, beautiful job. But Celsius is holding it down dramatically. She's down over 62%. And, I did pose a question to my wife if she wanted to keep that position. I knew she, the first kind of reaction is, no, just sell it. And, I didn't. I said, you know what, let me check. They have earnings coming up. Let's not be so hasty. Let's check on the earnings and see how the earnings are going and if we could see some positivity in this. And so with that, we can go to Celsius earnings. And guess what happened? Celsius earnings released on August 6th was a double beat, meaning that they beat their earnings per share, which forecasted out 0.23, and their earnings per share came in at 0.28. And then their revenue over 400 when it was forecasted under at 394. So they hit a double beat. And I looked at their prior earnings, honestly, after February, where they were in line. And then May's earnings was they got hit with low revenue. They finally got back on track, had a double beat, and that was because of one of their new strategic partnerships with Pepsi. With that being said, I made Twitter known that, hey, we will still be holding Celsius. We're still going to be holding Celsius. I wanted to see some positivity in the company. I did. We're going to be holding, and we'll be buying more of Celsius. Okay. On to our middle stocks. So our middle stocks down over 3%. Not that much. Market gain almost $2. But here, Target down over 12% here. Not too worried about that. And then Amazon, slight sell-off on Amazon currently. Costco is holding up the bear share of the portfolio at 15% here. We did almost even out on Nintendo as well. So not too worried about there. And keep in mind, this was because of that sell-off that just happened as well. So these stocks are trying to rebound. So our youngest, weighted rate of return over 10.25%. So very good rate of return. Nintendo, again, same as our middle. Nintendo's down. Starbucks down, but closing the gap on Starbucks. We used to be down a lot more than that 3%, so it's good to see that we're closing in on the gap here. Apple and Tesla, beautiful, tremendous job with both of those. And we will go to our oldest. Our oldest, as if you did follow the review from last week, we did add Costco to our oldest portfolio. So we have McDonald's, Apple, Costco. Costco doing pretty good here, up over 1.5%. Again, Apple over 25%. You can't beat it. And then McDonald's closing the gap on McDonald's. Again, if you've been following the channel, if you've been following the tracking and the updates per week, McDonald's was at one point of our oldest portfolio the worst position. Why? Because it was down consistently, and that was just trying to find its footing. So I think McDonald's has found its footing in the price, and as I mentioned before, I think we're going to see a nice little turnaround here. Okay, and we will go to mine. Now, year to date, we are looking at a little bit over 5.5%, so not bad. Dividends earned $4.59, and honestly, my stocks couldn't look much better than what they are right now. Literally everything is in the green except our meme stocks, right? So the meme stocks, we do have CrowdStrike, so CrowdStrike is down considerably. Robinhood is down considerably despite their tremendous earning report that they had this week. Tremendous earnings, but it is down over 17%. CrowdStrike, I'm still going to be buying CrowdStrike. But Palantir has been up. They've had good earnings. DTE's been up as well. And then UPS is down currently. But all in all, I am not mad at my sectors here. My sectors are pumping on all cylinders, and the portfolio looks good. Again, I have a little exposure to the stocks, to the meme stocks, only about 3%, so not really worried about that. But from a real estate perspective, we're in double-digit growth right now, or double-digit rate of return right now. We have public storage, federal realty investment, and then realty income, so both all three in the double digits. You love to see it. From the technology side, again, the technology side got hit hard. Those were the first stocks to be sold off earlier in the week, but again, we're rebounding here. So Coinbase down over 22% year to date, but we are rebounding. We are rebounding with Coinbase. Again, they got hit hard on the sell-off. So price is in a considerably good key level right now. So now it's just a waiting game. Microsoft down because of CrowdStrike. Amazon down over 5%. Meta still in the green here. Broadcom still in the green. And AMD, again, AMD was trying its best to come up, and that sell-off just knocked it back down off its pedestal. So not worried about that at all. And with that being said, guys, we will wrap up this video. Try to keep it short. I think we're doing a good job, almost at 14 minutes. But as always, if these videos were helpful for you at all, feel free to like, subscribe, comment. Let me know what you want to see if I'm not covering all that I can be for you. And as always, thank you guys, and happy investing.